Die Stummschaltung ist aufgehoben.
Wonderful. Good evening, everybody, ladies and gentlemen. It's a great pleasure for me to support you with this webinar, and great thank you to Admiral Markets for the possibility and the opportunity to make this webinar together with you. I hope you're doing okay and you had a great day, and I hope you were successful in your own trading. And maybe you can give me a little bit feedback if you have the picture, if you can see the presentation, and if you can hear my voice. Maybe put it, type it in the chat box, please. Can you hear me? And can you see the screen, the first slide of my presentation? So I hope so. We have to, I don't can use my webcam. Okay, great. Thanks for the feedback. I don't can use my, I cannot use my webcam this evening because today or this week I in Frankfurt am Main in the office of the asset management, and so I can only transfer my voice. I hope it's okay for you, but it's more important what I have to say that that you can see me. That's not so much important. So I hope you have a powerful day and a day full of positive energy. That's important for our trading at itself, that we are thinking always positive, because if you have look behind the real sense of trading, you will see that the trading at itself is not so important, but what we are learning about ourselves during trading, that's absolutely more important. We have our presentation here. We have our education series by Admiral Markets here, and I'm very grateful for this possibility to make this here with you. And our topic for this evening is the correct stop. And here our part 2. Maybe you remember we talked about last week about the part 1, how you can use the stop if you make trend trading. The topic today is how we can use the stop if we are making movement trading or breakout trading. First of all, we have to talk about the risk disclaimer. So I will give you some minute or just a minute to read this risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to the leverage. And you should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And this is very important. The presentation accompanying we use only for information and educational purposes only. And additionally, please be advised to study our kit, our key information documents, in order to understand the nature, risk, cost, potential gains and losses of products offered by us. Since August 2018, the regulation within the European Union differs between retail clients and professional clients. In our presentation this evening, we only use demo trading accounts. There's no difference in the high leverage in a risk-free environment. So why do you shoot Admiral Markets as your own broker? You can see we have the best offerings regarding DAX or Euro, US dollar. And for me as a real trader, it's really important that Admiral Markets don't use minimum stop distances or requotes. That's very, very important. So in my opinion, Admiral Markets is one of the best broker around the world. So here you can see the ESNA important changes, how the difference between the old and the new one, and this is your options. You can choose, you can make your own decision between the retail clients or professional clients. It's only information, but if you want to have more information about all that stuff, so you have here the different informations by phone, by mail, by YouTube, by Facebook, or admiralmarkets.com. The correct stop, part 2. Sorry, not part 1, that's my fault. Part 2. Why do we need a stop? Basically, we talked about that because stop will save your trading idea. Maybe you remember we talked about that your money management is responsible for your account, but the stop is saving and is protecting your trading idea. Now we want to talk about how we can use the stop if we make a stop by movement or breakout. And maybe you remember we talked about a special trading approach inside our reversal bars. And there we talked about the stop guiding when we use bar by bar or movement. So, and I want to show you how we can use the, let's see, maybe you want to trade or you want to make a trade if not by trend trading we talked about last week. Maybe you want to make a trade by movement. What does it mean? If you want to make trading by movement, it means that you make candle by candle, bar by bar. So you don't want to make a trend, you don't want to make a breakout, you want to see how far you can go with one candle to close to the other. So this is a different how you can use or how you should use your stop. And in this, with this in our mind, you have to use your stop in a different way, like trend trading or like breakout. So let's see how we can use if we make movement trading. Movement trading means you will see how far you will come with one move, maybe 10 candles, 20 candles, or bars, maybe what kind of word you are using, it doesn't matter. Let's see. Maybe you go inside of the market by a reversal bar, maybe, or a balanced candle in Heikin Ashi. It doesn't matter what kind of bar you want to use. So the first stop you can see is placed here where I have the stop loss arrow here, the black arrow here on the lower side where you can see SL stop loss. And now it's important, if the next candle has a close below the last candle or the former candle, you have to put your stop below or under the low of the next candle, which show you a close above the first candle. So maybe the first one, let's see, I will paint it a little bit. Maybe this is your entry signal. Whatever you are using, maybe this is a reversal bar, or this is a Heikin Ashi balance candle, or maybe a lot of traders are using patterns, candle patterns. Maybe it's a Japanese style, maybe this is your entry signal, whatever. Your initial stop is placed below this candle. And if you have a close above here, the close of this candle, you have to put your stop loss from here to the low of the next candle. So, in my opinion, it's very important that you don't use the initial stop. Maybe you should use here a soft stop or maybe mental stop or an alert, an alarm, whatever you use, you can see here. But we know everybody can see your initial stop. So it's much more better you're using here an alarm or a soft stop, whatever. But finally, the stop must be placed here. So next one, Next candle, next candle is this one. Now you have the next situation. You can see the next close is above this candle here. And now you should put your stop from here to the next low of this candle. This means the trading by movement. Only the movement. We don't talk about the trend or breakout actually, only by movement. You want to see how far your trade will come by the movement. So, but now it's special. Next one. Come on. Next one. You see, the stop follows the single candle. As long, and that's really important, as long you have a higher close than the former candle. That's really important. So the next candle means this one. Maybe you remember when we talked about our reversal bar setup. What do we have to do now? Because you have a close inside of the full body of the former candle. This means now you have here this outside bar, and this is your inside bar. Maybe you remember what we have to do with our stop now. What do we have to do if we see an inside bar? We have to put our stop one candle back here. No, come on. No. So you have to put your stop one candle below. Why? Because an inside bar means, let me show, it's really important. We have this candles means you have here your trend. Inside of this candles you have your trend, and now this inside bar means, oh, the trend is broken, and maybe you have an opposite trend, and maybe this means this trend can be go down, and then maybe it's going on the other side. And this is the meaning why you have to put your stop by an inside bar one candle back. That's really important. That the corrective trend has enough place to create itself. That's really important. So that is the meaning why you have to put your stop one candle below. So what will happen next? The next candle, you can see, is an inside bar as well. So the stop remains at the same position here. We put it back. What happened next? In the movement, oh, now you see you have a higher close than the outside bar. Let's see. You have a higher close than the outside bar. What we have to do now? Now you can put your stop to the low of the candle, which has a higher close than the outside bar. This is the meaning about the stop guiding when you use the movement. So let's see. Here you can put your next stop. So this is when you make a long trade by the movement. Not trend trading, only movement, because you want to see how far your trade will come. Maybe 10 candles, maybe 1 candle, maybe 3 candles, but it's really important that if you can see inside bars, and that is the special secret in the meaning when you make movement trading. not trend trading, then you have your stop at the point 3 at the correction point, you know. But if you want only to make movement trading, then you have to put your stop loss back one candle below when you see you have inside bars. That's really, really important. So let's go on. Next candle is an inside bar. And you see, you have to stop, you put your stop one candle back. But actually, you are in the winning zone. You cannot lose money because your entry were here on the left side where you can see the stop buy. But here, now you have your stop here, and now you cannot lose money. So, this is the first thing how we can use our stop loss if you make movement. So how we can go outside, when is the stop working? Let's see here our first option. So, you know, here's our entry. This is our first stop. If you have a higher close below the first candle, you can trailing your stop to the next candle, then to the next candle, and then you have an inside bar. That's great. Now what you have to do, maybe you remember what you have to do. You have to put your stop one candle back. One candle back. Because you know inside of this candles is working a trend. Because one candle is only the visible thing what is working inside of this one candle. Maybe this candle is meaning a 1 hour candle. But you know, in the 1 hour candle are 5-minute candles in a trend that you can see in the candles. So now you know if you have an inside bar, the trend which is running in a smaller time frame maybe is correcting here. This is the meaning of an inside bar. So that is the reason why you have to put your stop one candle back that the corrective trend has place to correcting. So now a next inside bar. You have to do nothing. Next candle, you see a higher close than the outside bar, and now you are able to trailing your stop below this point or I missed the word, to the low of this candle. Yes, and you can see here was your entry on the left side, and now you are in the winning zone. You cannot lose money. So, and now the next candle shows you this one. What happened? Because you are out. Because your stop were placed below the last candle, as last green candle, and here is a lower close, and now you are outside. But it's a winner. That it's such an easy stop behavior, everybody can understand it, and it's so easy. And in this behavior, you can follow the candles, you can follow the movement, not the trend. Maybe I use this kind of stop guiding when I'm very close to my target. Maybe you're watching my webinars by Admiral Markets on Thursday in English, and now you know my first target is placed and the FIBO retracement. But there's placed my first target. My second target is placed where I can see where is the volume high or volume close by market profile. And the closer I am at my final target, the closer I am going to lead or I'm going to behavior my stop. And if I'm very close to my final target, I use this stop guiding by movement under the attention of inside and outside bars. then you are safe with your winner, with your gains, and you can be sure that you can go outside of the market very close to your final target. It's not so difficult. It's a really easy behavior how you can use your stops. So the second option, how you can use. Let's repeat. Here's our entry. The first stop loss is below our entry candle. Then you guide your stop here, and now you have your inside bars. You put your stop one candle back. Then the next one, it's an inside bar as well. You hold your stop the candle below, and now here is the next candle, and you can put your stop up, and you can trailing it to the next green candle, which show you a higher close than your inside bar, your outside bar. Sorry. But now the next one you can see. Oh, here we have an inside bar. And you know, an inside bar will show you that you have to put your stop one candle back. Now, so you are also in the winning zone. But a little bit, you have less winning, less gains, but you are also in the winning zone. You can see what will happen next. This is your outside bar. This is your inside bar. And there's placed your stop. And now the next candle, and this is so much important because it requires your own action. This situation requires your own action in the market. Now you can see you have a close with this candle. You have a close below the outside bar, but the candle doesn't touch your stop. Did you understand? This is your inside bar. This means that you have to put your stop one candle back. The next candle has a close below the outside bar. But the last candle, doesn't touch your stop because you are still in the market. Your position is still running, is still working. But you have a stop, you have a close below the outside bar. Now you have to stop by yourself. You have to go outside, you have to push the button, you have to finish your position. My lovely dears, ladies and gentlemen, don't play with that kind of stop guiding. If you can see that you have a close below your outside bar, stop your position. Hope is not the real emotion in trading. Hope is only for stupid guys. You have to hold your damn rules. That's so much important. Not hope. Like, oh, the price will going up, of course, maybe next time. No, that are the rules. And you cannot be successful in the market if you don't hold your rules. That's so important, ladies and gentlemen. Please realize it every time in your trading. Don't hurt your rules. If you can see you have a close below your outside bar, close your position, take the money back off the table, put it in your pocket, put it on your account, but stop your position at this point. That's so much important. Your next chance for a trading will come. My dears, one trade is not important. Doesn't matter tomorrow. Tomorrow is a new day. Tomorrow you can make a new trade. It doesn't matter this one trade. Hold on your rules, please. That's what I tell my clients every day. Hold on your rules. And of course, maybe you can visit my education service. We have different packages where you can learn the trading by dowhow-trading.com. You can switch to the English version there. And this is what I teach my clients every day. And if they break my rules, my clients, I'm going to punish them because they waste my time. And you waste your own time. Hendrik, yes, it's the same by Heikin Ashi version. It doesn't matter if you use normal candles or Heikin Ashi candles. It's the same behavior here. But please, be attention about that. Hold on your rules. You waste your lifetime. And this is a serious thing, ladies and gentlemen. You waste your lifetime. We only have one life. All of us. We still have one life. And we cannot know when our life is finished. You cannot know when the Lord is finished our life. We cannot know. So stop wasting time with stupid trading. Stop wasting time with breaking your own rules. Please. You don't have to do it for me. I'm not important. I'm only Marcus. I'm only a trader like you. We are fighting on the same side. We are fighting on the same war here in trading. Trading is only surviving in a war, no more nor less. I'm not important. But what I want to give you is a lot of experience of myself. I'm trading since 18 years now. And I lost everything. I lost money, I lost my family, I lost my everything. I swear to God. But at that moment, when I realize that I have to hold my rules, at that moment I was and I am and I'm going to be successful in market. And this is what I teach all my clients in my service. I support around 100 clients in my service. And I'm so happy. I'm so grateful. I'm so grateful to my Lord that I can support all that special guys, ladies and gentlemen, special guys. They are fighting for their own success. And I'm so grateful that I can support them. But one of my rules as a coach, is hold on the rules. And for your information, I started a special experiment the last days. One of my clients said I have to teach them and I have to coach them very close. And we started this experiment due the next 40 months to make them to a successful trader. So he can trade by itself at the January 2020. And he wants to earn money with trading. And I have to bring the evidence that close coaching can be very successful to everybody who is able and who is willing to change your mindset. And one of the change that needed changing is hold on your rules. I hope you understand this. I'm fighting for you and I'm be with you with all my heart and my power because I don't want them to waste your time. Believe me, We have only one life. Don't waste it. Trading can be so successful. Trading can make happy. Trading can show you another view on the life. But don't waste it if you break your rules. So let's work a little bit at the chart, and we want to show how we can use it in the real chart. So let's see. I have prepared here a chart, and now you can see this is a normal chart with normal candles, not Heikin Ashi. It's only a normal chart. So let's see. I will paint it a little bit for you, and you will see how we can use by the movement. So let's see. Maybe this is our. We have our first stop here. So here we are inside in the market. Here was our entry. Maybe look at this one. Here was our entry. The signal doesn't matter now. It's only we are only want to see how we can use the stop if we want to make movement trading, not the trend. Because if you want to make the trend, the stop were here and here and here and here and so on. But now we want to make movement trading. Movement trading means one candle by the other. So under the intention of inside and outside bars. That's really important. So look at this one. Now you have then higher close here. So you have to put, and you can trade your stop here. Great. The next candle, you see, has a higher close than the former candle. You can trail your stop here. But now you can see you have an inside bar. You can see here is your inside bar. You can see here is your inside bar because there's the close in among the former candle. So this is now your outside bar. This is your outside bar. And now you have two inside bars. What you have to do with your stop, maybe you know it, maybe you remember your stop by the inside bar, one candle back. Now your stop is here. Maybe if you would put your stop to the next bar, you can see you will go out with latest this candle here, latest this one. But now you can see, the next candle is higher, but no, you are not still in the position. So that's the reason why you have to put your stop one candle back if you see the inside bar. So the next candle is an inside bar as well. What you have to do? Nothing. The candle is keep going here, still holding the position here. Now you can see the next candle has a higher close below the outside bar. What you have to do? Great. Now you can observe. Sorry. Now you can put your stop trailing up here. Now the last stop is here. You can see now you are in the winning zone. You cannot lose money. But now you can see the next candle, this one, this candle here. Let's see, this candle here is an inside bar again. Now this is your outside bar and this is your inside bar. Now what you have to do? If you can see an inside bar, you have to put back your stop one candle below, from here to one candle below here. So now your currently stop is placed here. You can see. And now follow the candles. Inside bar, inside bar, inside bar, inside bar, inside bar, inside bar, inside bar. And now, with this candle, you are out. But look at the chart. Look at the damned chart. The next candle is going up. And the trend is going up. Can you understand why I'm saying all the time, use soft stops, not your initial stop. Use mental stops or use an alert on that position. And only if you have a close here below the outside bar, then you have to close the position by yourself. But you can see there was only a spike, but not a close below this regularly stop here. It was only a fake. How can you avoid that you stopped here? Only if you use soft stops, stops which your broker doesn't know. That's the reason why you have to use alerts, alarms, or soft stop, or mental stop, or whatever. Maybe we are using this kind of stop like soft stop. Now we are inside of the position. But you can see this is the outside bar. And here we have inside bars, inside bars, inside bars, all of that inside bars. You are still in the position. You are still in the position. Still in the position. Still, again and again, again. Look at this one. You are still in the position because here and here and here you're still. Where is the next candle which has a close? There. Here is it. Here is your position. Here is your candle, which has a higher close than your outside bar. And now you are able to put your stop from finally from here to here. And now you are a great winner. Look at this one. The next candle has a higher close than the candle before. Put your stop to this candle, the low of the candle, of course, not the body, the low of the candle. And look at this one. It's so great. It's so great if you can use this kind of stop in your behavior. You don't have to make a trade, the trend trading. It's enough you make movement trading in attention of inside and outside bars. And of course, that's the secret. If you use mental stops or alerts or soft stop, maybe not initial stop. So now you can see you have here the next inside bar. What you have to do? You have to put your stop one candle back. And now your stop is here again. Look, here again. And now you can see the market. You have inside bars. And of course, now look here. You have here a candle with, look, a close below the outside bar. And here you have your rule. Now you have to close your position by yourself. Do you remember about the slide? This was the second option how you can go outside of the position. Now you have here the close below your outside bar. This is the point where you have to finish your position, where you have to close by your position by yourself. That's the rule. But now you can see, here was your entry. What a big gain. What a great trade. Look at this one. What a great trade only by stop guiding by movement. I guess it's not really difficult. The real challenge, the real challenge is taking place in your mind, that you hold your rules. That's the real challenge in trading. So this is the behavior when you use the stop by movement trading. So let's talk the last minutes. If you make a breakout trading, what does it mean you make a breakout? Breakout means you see where is the last high or the last low in a special point in the chart. Maybe you can see here. It means it's our last point too. You know it if you follow this education series. This is the last point too. This is the last point too. Or if you go outside the downside, this is the last point too. This is the last point too. Or on the other side, highs and lows. What does it mean if you make breakout trading? Breakout trading it's really easy. You are speculating on the breakout on this point. But breakout trading means that you have your risk in money. You are using higher lots or more contracts, more money. It's the opposite to the risk in the chart. You have a small risk in the chart, and you let the chart or you let the market make the decision how much money you can make. But in a breakout, you have a higher risk because you expect only 3 or 5 points to earn with your trading. In this kind of trading, that's my opinion, that's my experience in my trading style. I only have uh, an initial stop very close to my breakout candle, and I expect only 3 or 4 points by breakout with a high risk. It's a great trading approach, but it's very risky. It's really risky. It's really tricky. So, and you need a really good execution of your broker, because you only have to make money with 3 or 4 points. Maybe with this breakout approach, you have to not in forex, maybe in futures like a Dow future or a Nasdaq or S&P future, where you can make 3, 4, 5, 6 points with one breakout. You can see with one breakout, here is your entry, and you make money with one candle. Only in, out, in, earn money. In, out, earn money. No movement, no trend, only a short breakout. In, out of the market. In, out of the market. No more or less. That's very stressful. I can say it in my own experience. I tried it a lot of times. It's not my behavior. I hate it so much. You know, I'm not the youngest guy. I'm 47 years old. I have a little bit experience in the market. Um, I'm a calm person. I'm a calm trader, and this kind of trading is very, very stressful. I cannot, it's not a proposal of my side. It's not my trading approach. But in this kind of trading, you don't use a trading stop. Why? Because breakout means use the breakout of one point in, out, and earn money. You don't have to trail your stop. Only a catastrophe, uh, only an initial stop may be very close to your entry. Maybe breakouts has a very bad uh, uh, um, chance risk behavior. I don't know the shortcut of this word now, but maybe you know what I mean. Breakout in the breakout trading, you don't have to use trailing stop because you are very, very short in the market. A short time, only for seconds, only for 1 minute, only for breakout, one in, out, and out of the market. That does it mean when I'm talking about the breakout. So now we have talked about our stop. Thus, here's a question. Jack, thanks for your question. Does this method work in consolidation markets as well as trend markets? You're completely right. In consolidation markets, it's very risky to use the breakouts. It's better you have a trend and you can see very clear. You can see very clear your last point, point 2. Maybe you can see there very clear, and you have a trend. You can see you have a correction, and now we are very close to the point 2, and you can see there is a breakout. If you have maybe a consolidation phase, it's very risky to make breakout. It's I cannot say use it. I would say wait to a trend that you have clear highs and lows, and then you can make better breakouts. But don't forget, Jack, it's a really stressful trading. You can make more money with trend trading or with movement trading. So I will show you how I use the market. I will show you tomorrow, but you are in a special position with our webinar this evening. You can see I have, they are working 4 positions for trades now, maybe Euro Canadian dollar, you can see it here. And you see I were inside in the market, there was my entry, here the green line. And you can see what I told you, the market will go back in the fair value zone. Maybe you remember where we started this trade. The market will go back in the fair value zone. And it does, and it works. It really works. Look at this one. It really works. So you can see the other. Where is it? This one. New Zealand US dollar. You can see we started with our trade here on the lower side in the extremely zone, in the red zone. And you can see I told it last week. The price will go back in the fair value zone. And now where we are? Now, here we are at the point of control. I told it last week that we will reach this point, and now we had reached it now. And the surprise for you for this evening, the market profile is going published last days. And if you want to use it, I give you the link for if you want to use it. You will find it in the chat box. You can see here. Oh, sorry, that's wrong. So let's see. Copy and paste. You can see here is the link in the chat box. Use it if you want to see where you are in the market. You can use this market profile indicator. It's only an indicator. It's not an expert advisor, but in combination with my expert advisor and the market profile, you can make a lot of money. But let me tell you the secret behind that. There are rules. You have to hold your rules. You can use this expert advisor. You can use this indicator, but it doesn't work if you don't hold on your rules. Please don't forget that. That's all for this evening. I'm very grateful that you were being a part of this webinar. Thanks for a lot of customers and clients this evening. Thanks, Bruno. Thanks, Desislava, Henrik, Jack, Joe, Kostov, Christine, Leymut, Marcus, Marijan, Mick, Nigel, Niati, Richard, Roger, Roland, Sandra. Thanks a lot. Stephen, of course. Stephen, of course. Thanks for being part of this webinar. I'm so grateful. I'm so happy to be in contact with you. Maybe you're being a part of tomorrow, because tomorrow at 11 German time, we have our market outlook, I will show you how I make these trades, and maybe you have time tomorrow, or we will see us in my education service. You're very welcome to try it out, or we will see us next week on Wednesday. I wish you a wonderful, great evening. Enjoy the rest of your time, and please pay attention about yourself, care about of yourself. Don't forget, we only have one life. Use it wisely and don't waste it with stupid trading. Thanks for your time and enjoy the rest of your time. Bye bye.